Good morning. We are half an hour from the reopen here in Hong Kong. Markets in Shenzhen and Shanghai are still shut this Friday. You're watching the China Show. I'm David Ingles with Rebecca Choong.
Our top stories this morning. Markets welcoming a potential breakthrough in the US-China trade standoff. Asian stocks and Wall Street futures are getting a boost this morning as Beijing says it's evaluating, quote, direct talks with Washington. Japan's finance minister, meanwhile, saying US Treasury holdings could be a card in trade talks as their chief negotiator sees discussions gaining momentum.
I'm Paul Allen in Sydney on the eve of a knife-edge Australian election. The prospect of minority government looming large as voters weigh promises on inflation, housing and the impact of Trump's tariff war.
And I'm Avril Hong in Singapore, where voters also head to the polls tomorrow amid a challenging time for this trade-dependent economy.
Good morning. Happy Friday. Welcome to the show. We've ripped the script up a couple of minutes to the show with some breaking lines coming through here out of China.
We love it.
Possible developments. Why not? Keep us on our toes as we've almost danced into a slow lullaby. Looking at how markets have retraced higher. There's a lot more green on your screens. A lot more markets are coming online today. You still have mainland China and Vietnam shut today. But as you can see, we are set up for quite some hefty gains going into the open today. U.S. futures in particular have shaken off the early cobwebs. We're now up 0.6 to 1%. We're seeing some strength coming through. In the currency, yields are also pushing to the upside. Very quickly, just a recap of the overnight session in the U.S. here on Chinese-listed equities there very briefly. Also a touch higher on the Golden Dragon Index. A couple of stocks we're tracking. NEO, EVs, Macau casinos, gold among the sectors we're tracking. Futures are pointing to the upside in Singapore. You have the contract coming online here in Hong Kong. And, of course, also some strength coming through in the Chinese currency at 726.30 and change. That now puts the exchange rate at the lowest or strongest, near the strongest level in about a month or so. Let's get to the top story today.
Yeah, to your point, Dave, I mean, we were prepping about 30 minutes out for a very different show. I mean, the top story now, China's saying it's assessing the possibility of trade talks with the US. Of course, a big development for us here. It's the first sign of this potential thaw in relations since President Trump hiked tariffs and tensions last month. Our China correspondent, Min Lo, is with us. Min, just tell us, what are we hearing from authorities? And break down some of the nuances that we're seeing out of Beijing.
Yeah, so the Ministry of Commerce essentially saying that that the U.S. has reached out to China via various channels, essentially confirming what we saw on Chinese social media yesterday, a post by an account affiliated with Chinese state media CCTV, and China now saying it is evaluating the possibilities for talks. And I think you can see this as how Chinese state media has been sort of seeding the ground for potential talks, softening the atmosphere here and emphasizing that it is the U.S. that is reaching out first and how that shows that U.S. is the more anxious party. China doesn't actually need to negotiate unless the U.S. offers something meaningful. And the Ministry of Commerce statement actually comes with a lot of strings attached. If you see that quote there, it says what China wants to emphasize here is that any possible dialogue or talk will have to have the U.S. correct its wrong unilateral tariff measures. If the U.S. has no sincerity at all, that will further damage mutual trust between the two sides. So China wants the U.S. to correct its mistakes and remove all unilateral tariffs, which I don't know what the possibility for that is.
Okay, well, we'll keep an update. It's certainly a step forward, a mini step, if you will. Min Lo there, China correspondent. As we were pointing out, U.S. futures to the upside, Asian equities to the upside. Yields are also pushing up. U.S. two-year yield on your screens coming up shortly, up 2 basis points, 372 right now on the two-year yield in reaction to that news. Let's bring in Garfield Reynolds, who leads our MLive coverage across the Asia Pacific. Garfield, how are you guys thinking about this at this point?
Well, David, I think what Min was saying there was a very good corrective to the idea that you're suddenly going to get progress towards an actual solution of the range of trade conflicts actually the US has around the globe, but especially with China. However, I think there's also the nuance that for markets, what matters is anything that can add to the idea that President Trump might go on delaying the tariffs that he's already delayed and could look to delay or adjust or temporarily suspend some of the measures against China. If you think of how he moved to exclude a whole range of Apple products effectively from the impact of the China embargoes because of the concern of what that would do, both to Apple itself and to the U.S. economy, the U.S. vibe. So that, I think, is the next step that investors are going to be eager for, is the idea that this will add to the potential for whatever tariffs we do end up with, for them to be smaller than initially announced, for there to be some leeway, some relief, at least in the short term, even if over the longer term the US does end up imposing long-term tariffs at some level, but hopefully a level that's not 145%. If you remember, President Trump did say that, obviously you can't, there will have to be a lower level. He thinks there will be a lower level for China tariffs, by the end of the process. So that's what investors are looking for, is the delays in tariffs that would allow for less short-term damage, and over the longer term even less damage. The question is, do they get that? After all, one of the things that just about everybody who has said they're interested in talking about tariffs is that they want to go back to zero tariffs. They don't want even the 10% baseline that has been imposed under the reciprocal tariffs. And it's very clear from the US side that that's not something they think should be negotiated. That baseline is supposed to sustain. So, the devil is going to be very much in the details of how the US is still a long way away from where China thinks it should be for there to be a deal. And there is still a lot of ground to make up in a whole range of deals.
Garth, to your point there that the devil's in the detail and that investors are looking for these concrete actions that you've nicely laid out for us, do you think that the threshold that investors have for needing to see concrete actions is changing? And do we see any signals in the market there is a degree of fatigue entering when it comes to sort of the will they, won't they do a deal, the whiplash that we've seen ripple through markets over the past month or so?
Yeah, well, Rebecca, it's a good point you raise, and I think one of the key things that has helped markets to get more optimistic over the past week or so is there has been a lack of whiplash from President Trump and from his administration on this. There haven't been threats directly about how, well, they need to do this, otherwise we're going to, we're going to bring the tariffs in early or something, like that. If you think about a lot of the back and forth that happened in March with Mexico, Canada, that was then the focus. And you also think the early days of April, when you not only had the retaliations from China, but you also had a range of competing headlines on there will be exemptions, and then no, there will not be any exemptions. I'm not interested in giving exemptions, said Donald Trump. But then he did give exemptions. So we haven't had that sort of whiplash when it comes to trade. We've had an overall message from President Trump, from Treasury Secretary Bessent, that deals are in train. They are talking with all these countries, and they find what they're hearing from them encouraging, and so they think they will be able to reach deals soon. So I think the next couple of weeks are going to be key, because we need to see some actual, at least heads of agreement, and then investors will get to judge what that means. Does that mean more delays? Also, there is the lingering concern about empty shelves, about the disruptions created by the tariffs showing up in real-world data, potentially leading to significantly higher prices or to significantly lower retail sales, because products, nor not enough products are on the shelves, because people can only buy 2 Barbies when they wanted to buy 30, so to speak.
Well, happy Friday for some.
Already.
unless you're adding Barbies to your Christmas wish list. All right, Bloomberg's Garfield Reynolds in Sydney there for us. Now, I mean, to that point about some of the data that we're seeing coming through from the US manufacturing activity shrank in April by the most since November. For more on that, Bloomberg News Desk editor Jill Desis joins us in studio. Jill, I mean, just break down the sort of headline, the big numbers that we've seen come through.
Yeah, well, certainly, I mean, we've seen that factory activity certainly contracting, as you said, shrinking by the most in 5 months. I think to Garfield's point just there, I mean, all of this data is really telling us is exactly that story where you're seeing weaker demand, you're seeing a lot of concern over the uncertainty of tariffs, and that's really sort of feeding through into some of it's really constricting a lot of these firms from actually being able to expand because they're all waiting to see what the results of the tariffs are going to be. I mean, I thought some of the most telling information came from some of the breakdown from, you know, all of the different industrial sectors, machinery sectors, saying the two issues they're seeing are customers are holding back orders to understand what's actually happening with the products, and then when they are placing orders, they're kind of putting it on these firms to sort of absorb some of the costs from the tariffs. And so from the machinery sector, they're essentially saying we can't take the jobs because we can't, you know, afford to pay some of those higher costs that are starting to be built in here. So I think really, again, that just kind of speaks to the fact of the matter, which is you're seeing, you know, less production, you're seeing less demand, you're seeing backlogs sort of, you know, start to evaporate there. And if all of this is starting to feed through in April data, I think, you know, the big concern is what is that going to look like in May, June, July, beyond, particularly if we don't really have a firmer resolution to a lot of these standing issues of tariffs that we're still waiting to hear on, that Garfield was just discussing.
Yeah, and I mean, to your point, we get the jobs report later today, which might actually just add to the noise of the backward-looking, you know, elements to this. And do you get a sense that the direction of travel for data is really to the downside in the next few weeks and months?
Well, I mean, I think, David, you know, we're already starting to see that across the world, right? I mean, you look at some of the early trade data that we got out of Korea, for example, one of our, you know, sort of leading indicators, some, you know, trouble spots there. Yep. Take a look at the China data that we just got earlier this week. Certainly a lot of concerns in some of that factory data out of China. So, yeah, I mean, if this is some of the early indicators that we're getting about some concerns going forward when you're looking at these PMIs, it's, when you're looking at this trade data, then, yeah, I mean, I think, again, just so much uncertainty at this point. You know, I mean, as Garfield was just saying, we're still waiting on the resolution of a lot of these trade deals. We still don't know whether China is actually going to sit down with the United States, just that they're thinking about doing so. So, I mean, it still feels like we're very early in the stages of actually negotiating any of these deals. We've still got, what, another couple of months to resolve some of those issues with the reciprocal tariffs before that deadline passes. I mean, you know, you don't need me telling you that there's loads of uncertainty, but, you know, certainly there's still loads of uncertainty that we're dealing with here.
Absolutely. We're a bad headline away from just looking at the change in the market reaction that we're seeing right now. Jill, fantastic. Thank you so much. Jill Desis there, our Bloomberg desk editor. In fact, just coming up next here, can markets still treat bad news as good news here in as far as maybe, you know, the support coming through out of monetary authorities? Amy Patrick will be joining us out of the Pendal group here to talk us through the latest data, earnings, and what we should make present tense of the news lines coming through in the last hour or so. Counting down to the reopen of markets here in Hong Kong, and it's looking like the tailwinds are gathering strength. 16 minutes to the opening bell. This is the China Show. Happy Friday. All right, the news headlines keep coming right now. So as you can see, we're a bit across risk assets right now. Taiwan is up 2% in the opening minutes. We're getting some latest lines coming through here out of Marco Rubio. He is speaking to Fox News. Just to caveat, we don't understand the context and what the question was, but the commentary coming through is that China is reaching out on economic issues. You know, just to rewind maybe 30 minutes back, the line coming through out of the Ministry of Commerce in China says that they are evaluating potential trade talks, which is why you see markets are on decent footing going into the thick of the Friday session. Let's get a sense of direction of travel, and can we treat this good news as bad news? The data so far has been soft. Soft data has been softer. And we're going into a jobs report. There's a conversation around Scott Bessent talking about how when you look at a two-year yield, it's not below the Fed funds rate, so the Fed should be cutting interest rates. Amy Patrick, head of income strategies at Pendal Group, is joining us right now to just help us sift through the noise and, you know, latch on to proper signals here. Amy, what do you make of the latest news lines coming through? And can we actually treat this as, I don't know, progress on these trade talks? And might that lead to higher yields moving forward?
Okay, I think the market's kind of moving in phases in terms of the reactions to the headlines that we've seen. And generally, you know, if there was a word to sum up April, it was probably brinksmanship. It was all about pushing everything to the edge, whether it was, you know, the trade war situation, the tariff situation, or even sort of American institutional quality question marks. But maybe May will be a little bit about de-escalation, you know, coming back from that brinksmanship. Is it progress? Yes, I would say that, you know, in terms of how hard the US side had pushed on the tariffs front, all it really left room for was negotiation and de-escalation and stepping down from that. So, yeah, it's understandable why, you know, equity markets like this news. Is the uncertainty over? I very much doubt it. But also, was the slowdown in the US economy already baked in before any of these tariff talks were even talked about? Absolutely.
So, Amy, when we're thinking about that dynamic that you're describing, high levels of uncertainty, but perhaps entering a phase of de-escalation, how are you approaching that as an investor? What are you liking? And how are you shifting your strategy from this era of brinkmanship to perhaps this new era of de-escalation?
I have to look at what's priced into different asset classes. So I'm a fixed income investor first and foremost. So first of all, I think about what's being priced into bonds. Australia is a little bit different to the US, but let's stick on the US picture for the moment. So if I think about, you know, what at least what the Fed tells us that neutral is for the US, you've got rates markets pricing in that the Fed will eventually get there, but over the next 18 months or so. So the rates markets is telling you that, you know, not even that much of a slowdown concern is necessarily being priced into at least the very front end of the US interest rate market. And I would guess that for what you're seeing in terms of, say, shipping volumes coming from China over to the US, disregarding some of the front-loading data that we've seen in the recent PMIs and ISMs, looking hard at, you know, the most recent Chinese PMI data, actually, which was the first hard PMI that came out for April, telling you that Chinese exporters definitely seeing, you know, some struggles coming through on that front. I would say that the front end of the US probably does not have enough of an easing rate cycle priced in for the slowdown that we've got. So medium term, I do like duration, but then the question mark is, well, how much term premium needs to be in the curve for all of the other uncertainties that are out there?
Right, and maybe just to ask you as well, in terms of just income strategies, you know, we don't know what the economy looks like in 3 months, right? To your point, it seems that the data is really, really softening, and I'm wondering, would you venture out into non-quality? How does high yield look to you at the moment?
High yield is interesting, and I'm going to dovetail this conversation a little bit into the land of leveraged loans and private credit as well, especially if we're talking about the US. So what you've seen about the texture of the US high yield bond market in particular over the last 18 months is this drift up in quality. And yeah, you heard me right, drift up. And the average index credit quality has improved, not because US companies are en masse getting better quality in general, especially at the leveraged end of the spectrum, but more because of the expansion of the leveraged loan market and because of the private credit markets. And because there has been so much attention, and not just in recent months, but also in recent years of this cycle, you know, a higher interest rate environment, investors demanding an even higher return, a higher margin on top of those interest rates from those income type of instruments, the lower quality issuers have actually moved out of the high yield index. And so what you've seen this cycle has been a very muted default cycle, and all lead indicators point to high yield defaults remaining fairly contained, you know, outside of a dramatic slowdown that ends up into a recession. So my outlook on high yield is, you know, I don't think it's particularly cheap, but I don't think it's particularly expensive, and I think that the default environment will remain contained.
Amy, I just want to pick up on your point there about defaults. I mean, even if we see that default environment contained, to what extent do you think we are still, and we should still be expecting a major repricing in private credit? There are a lot of arguments out there now that private credit, of course, it hasn't marked to market and so on. And we are not yet seeing the recalibration that we have seen through the rest of the market, including to some extent through high yield, earlier in the year, albeit.
Yeah, so just to be clear, the default, the contained default environment that I was referring to is very much in the publicly traded high-yield bond market. And it makes a lot of sense that, this is the market that you probably see a lot of market volatility in, because when you've got, the wisdom of crowds acting on, what is the right price, what is the right value for this asset class at any moment in time, you're going to get a much more transparent picture, and the disagreements come out in the price volatility that you see. Private credit is a whole other kettle of fish, because those valuations only come through once a quarter, maybe once every 6 months. The valuation process may differ from fund strategy to strategy, fund to fund. Now, I don't run any private credit strategies myself. I do not buy any private credit into my income strategy. So I say this all, with that big caveat. But I think this is the part of the cycle now, because default rates are picking up in places that we can't see in asset classes that are not transparent. It will be, a testing time to see which other funds that have stayed sort of true to label or higher in quality, how they do out of the next part of this credit cycle and default cycle, versus ones that may have been chasing, too hard the lower quality opportunities into the end of the cycle.
Yeah, the delayed cadence between blinks is interesting, the illiquidity part of this. Amy, thank you so much. That's all we have time for today. We didn't even get to talk about elections coming through. They will do that, of course, in due time. Amy Patrick, the head of income strategies at Pendal Group over in Sydney. Yeah, the news flow has really forced us into talking about why we're seeing gains. As you can see, going into the open today, 6 minutes away to reopen here in Hong Kong. Risk assets are bid this Friday, and we could actually see the S&P 500 looking at futures right now. Clock in its first 9-day win streak in 20 years. This is the China Show. Oh, 1 minute?
Yeah.
Right, welcome back to shows. Happy Friday. Yeah, there you go. Hence why.
You're right, Dave.
Well, it's not me. The news flow has really given us some momentum coming through here. So stocks 50 futures pushing higher. S&P 500, which, by the way, 8-day win streak overnight. We could get 9 days.
Wow.
Commentary coming through out of Marco Rubio that China has reached out. The other side, quite literally and figuratively, is the Minister of Commerce in China says that the U.S. has reached out on various fronts, and that they're evaluating those approaches, plural. 3/10 to 1% at the reopen today. So, yeah, we'll see what this looks like. We're looking at a couple of stocks going into the open today. More on that in a moment. The opening bell just over 3 minutes away. This is the China Show.
Welcome back. You're watching The China Show. We are counting down to the open of markets in Hong Kong. And there's really one big story that's sort of the name of the game for markets this morning. And it is all about China perhaps being open to talks with the US over trade. There has been a real dynamic back and forth, he said, she said, if you will, about whether or not China and the US are beginning negotiations. Does look now for the first sort of concrete signs that Beijing is willing to start that process.
It looks like they're acknowledging the presence of each other. I think
absolutely.
It's a good starting point, right?
That's a very good way of putting it, because we do need to sort of keep very measured expectations here. The statement itself has a lot of these nuances around all the requirements that China has, particularly this issue around respect. It's been a big sticking point. They just don't believe that their counterparts are necessarily sincere. That's what they need to see from their US counterparts.
Yeah, they haven't. That's right. They haven't agreed on the starting point even for negotiations.
Absolutely.
But the fact that we're getting signals from here, and Marco Rubio just talked about, of course, almost the opposite, but the same thing, that they are in touch with the Chinese there, as far as that's concerned. The reopen in Hong Kong, 0.5 to 1% on Hang Seng Tech Index, bottom of the screens. You have Tencent, you have Alibaba, so tech is leading some of the gains right now. HSBC, of course, Mark Tucker was the big story overnight. I think he is as chairman. You can read about that later on. We'll get to that in a moment here. Right, other things as well. Dollar China, 726.44, which effectively puts us, and by the way, we don't have a fix today because mainland China is shut. That puts us at about near a 1-month high on the offshore currency in terms of data coming through today. GDP numbers are coming out. Macau, Hong Kong, retail sales for March, so very backward looking as far as Hong Kong goes. Right. You had the car sales numbers, which we'll dig into in a moment here, but just to look at some of the names there. NIO, by the way, has really had a terrible time of it in terms of the stock price, and as you can, it's catching down to I think the 2 days of steep losses in the U.S. Zijin Mining is catching up, although gold, as the price itself, is at about 2-week lows, if I'm not mistaken, 2 straight weeks of declines rather. There, Yum China is also that's an earnings story, 6.3%, and BYD, of course, reporting quite a decent set of numbers. Very, very quickly, Macau casinos out yesterday with the better than expected revenue
quite a
intake.
Surprise. In the numbers from Macau. I mean, estimates were expecting a decline,
negative,
in fact, actually. So it does suggest that things are perhaps looking up. Interesting in light of the Macau numbers that we're going to see. I wonder if that affects GDP.
Yeah. Which means the house is winning, and some people are walking away from these casinos with it empty-handed. But anyway, that's not the problem with the casinos, is it? Anyway, let's talk about the car story right now. Some of the lines coming through out of BYD here.
Yeah, that's absolutely right. I mean, if you, unfortunately, like me, were working yesterday on the holiday day, you would have seen the whole slate of automaker numbers and sales coming through. BYD, to your point in particular, posted its best month of sales yet for this year, with the EV maker on track to hit its full-year target of 5.5 million deliveries. And Macau gaming revenue also coming in better than expected ahead of the May Day holiday week. So it was a busy holiday for me. To wrap all of that up, though, Bloomberg's transport reporter Danny Lee joins us along with conglomerates and media reporter Shirley Zhao. Danny, let's start with you first. Just put those BYD numbers in context for us.
Yeah, best month of the year so far, but really off the back of a lot of the sales are kind of the overhanging fruit of old inventory of models, so they're still able to churn out a record. But when you also look then at between the hybrids and the EVs, the pure EVs models that they sell, it's the first time that the pure EVs have overtaken hybrid sales on a month-by-month basis since January 2024. So that kind of turnaround, particularly as they will start to deliver new models, upgraded tech over the next month or so. So this month, particularly February, will be very much closely watched as you get the figures then next month. But yeah, overall, it's a good performance to clear out the kind of old kind of models before they really try to hit their stride and really accelerate deliveries in towards the end of the year.
What about the rest of the industry?
I mean, the rest of the industry are also benefiting. And, of course, we've just had the Shanghai Auto Show last month as well. So sales saw quite a lot of the upstarts that we closely watch, many of them posting double-digit gains in sales year on year, and many of them hitting their kind of second-best sales on a monthly record. So for the broader industry, they're all kind of following in BYD's way, but they're all benefiting as well. So kind of good position for most of the automakers to be in.
All right, let's just pivot the attention now to casinos and, of course, just wrap up the data there. Shirley Zhao, of course, as we pointed out, is here with us as well. Yeah, so the data came in better than expected.
Yes, so April's performance in Macau was actually boosted by a tourism increase during the Easter holidays. And the visitor arrivals during the Easter holiday were actually 28% higher than the same period last year. So that was pretty good for April. But then we have May coming up, and then, we are now in the Labor Day holiday, which is one of China's biggest holidays and one of the peak travel seasons for Chinese tourists. So the May holiday performance in Macau would really test Macau's gaming resilience for this month.
OK, so look for May data, of course. And then what are we expecting? What's your outlook for the rest of the year?
So the rest of this year, Macau still faces a lot of challenges, including the U.S.-China trade war. Although analysts are not expecting the Macau casino industry to be directly affected by the trade war, but, Macau's gaming industry is really depending on Chinese tourists and Chinese consumers' confidence. And we know that Chinese consumer confidence right now is pretty weak, and China's economic outlook is pretty weak as well with the U.S.-China trade war going on. So that could affect Macau's performance for the rest of this year. And also there are also, regulatory uncertainties because Macau is trying to shift away from gambling into developing non-gaming activities, and those could weigh on Macau's gaming performance for this year.
Yeah, there we go. Team, fantastic. Shirley Zhao there on the casino story, Danny Lee on the auto story for us, wrapping up the data for us right now, going into the Friday session. 5 minutes here into the cash market session. We're looking at gains. Actually not gains anymore. Hang Seng Index has erased the early strength, but it is early in the day. We'll get a taste, by the way, of how those ongoing, of course, in the May Day holidays are shaping up later here on the China Show. With Thursday marking the peak travel day for many, so in case you have braved past tense the crowds, good on you. Anyway, more on that in a moment. Plenty more ahead here on the China Show. Good morning.
What we like the most is policy stability and policy certainty.
We're looking for governments to invest in scientific education and making sure that access to that scientific skill set is available through the right channel.
It's important that whichever government comes forward after the federal election gives us a lot more certainty around industrial relations, around environmental and support for mining.
I'd like to see the trade relations and the ability that this government's shown, over the last 3 or 4 years to stabilise trade relations continue with whichever government wins the election.
We would really like to see further easing of supply restrictions or supporting supply and fast-tracking of supply of housing.
One is to make sure that we've got clarity on where we want to go with the transformation of the energy system, and that's ideally that would be a common view across both parties.
It's about finding ways to extend that position such that Australians can benefit from the amazing expertise here and the incredible position we've already established.
Innovation is the key to productivity. That is how you stay ahead of the pack.
There you go. It's just some of our guests. Over the past couple of weeks, you're talking about the elections, of course, in Oz coming through. You have the Labour Prime Minister, of course, Anthony Albanese, seeking a second straight term as he faces off with the Conservative opposition leader, Peter Dutton. Now, to give us a preview and just really give us an update, really more on what's taking place on the ground in Sydney, Paul Allen is there, of course. Paul, you're at a polling booth which is open for early voting. What's the mood like there?
Yeah, well, early voting is turning out to be one of the major stories of this election. All morning, we've just had a steady, small but steady stream of people trickling in to cast their ballots. But the latest data that we have from the Electoral Commission is now more than almost 7 million people have cast an early vote, and that's getting on for about a third, more than a third, of the entire registered Australian voting public. So a lot of people have already made up their minds. When you combine that data with polling data, it does suggest that Prime Minister Anthony Albanese is probably on course to retain power. Perhaps with a majority, the more likely outcome may be a minority government formed with the support of some of those minor parties. The path to power for the opposition leader, Peter Dutton, is a lot harder. The coalition currently only has 53 seats, 76 needed for a majority. So he's got to win back everything that the Liberal Party lost in 2022 and more besides to eat into Labor's support. The polls, the early voting, suggest that that's probably not going to happen. Anthony Albanese likely on course to retain power tomorrow.
OK, Paul, depending obviously on those outcomes that you've just outlined, are we and should we be expecting any major policy reform in the next 3 years in Australia?
Well, that seems very unlikely. This has been a campaign of pretty small targets and small policy ideas. Both parties recognise the cost of living is a key issue. Both parties have put forward some ideas to offer relief around that in terms of playing around with taxation settings. Both parties also recognise that housing is a major issue, but even the reform around that issue seems to be rather timid and incremental as well. Obviously, the trade picture is a huge issue, but neither side has shown any willingness to poke the bear on that, be it the United States grizzly bear or the Chinese panda, because Australia is balancing the interests of its largest trading partner, by far, China, with that of its key defence partner, the United States. So not a lot of interest in getting into serious policy debate on that either. Now, in regards of the trade war, that rather shocked Australia on April 2 when the country got hit with a blanket 10% tariff. Exogenous crises do tend to favour incumbents. Anthony Albanese's been playing it safe on that front as well. And we heard a moment ago from one of our speakers saying markets crave safety, they crave stability. Well, that is what Anthony Albanese appears to be selling at this election.
Markets craving stability. I mean, there and in fact elsewhere across the region and in fact the globe. Yeah. Bloomberg's Paul Allen there in Sydney with the very latest for us. And turning now to another election that we are following very closely here this morning. Singaporeans heading to the polls on Saturday. It comes amid a global trade war that's causing a more volatile and challenging environment for small and open economies. Bloomberg's Avril Hong is standing by. Tell us, what's at stake here, especially when it comes to the ruling party?
Yeah, Rebecca, stakes are really high this election, perhaps more so than the last one in 2020. The Prime Minister has already called Trump's 10% tariffs actions that one doesn't do to a friend. And keep in mind as well that when it comes to the trade backdrop, yes, maybe we see the US and China talk, but make no mistake, if there is a trade shock, this would have ripple effects for the global economy, and that would have certainly implications for the likes of Singapore. So the ruling party here is really asking for a powerful win. And mind you, this is a party that hasn't lost a single election since independence, and they want the strong mandate in order to lead the country amid these uncertainties. Have a listen.
Singapore's Lawrence Wong faces his first electoral test since taking over as Prime Minister and is seeking a strong mandate to govern at a time of major shifts in the global trading order, a system that Singapore's trade-reliant economy has long benefited from. The country will have to navigate Trump's tariffs and balance relations with China, its largest trading partner. For voters, bread and butter issues remain top of mind. Singaporeans face elevated prices from food to housing, though inflation has eased and authorities have rolled out a slew of measures to help people cope. Questions linger on the extent in which the ruling party can ride the momentum from handouts and subsidies into the election, or whether different generations of Singaporeans have different priorities. The ruling People's Action Party lost more seats to the opposition in the 2020 election and saw a drop in its vote share. Amid a political transition, a number of ministers have recently announced their retirement, and the PAP is fielding its largest number of new candidates in recent years. Singapore's external challenges come at a sensitive time as its leaders hand over the reins to the next generation.
And to give you a better sense of these external challenges, many of Singapore's key trading partners face levies much higher than 10%. So this could deplete shipments. And this is a country whose trade volumes are 3 times its GDP. And keep in mind that the market volatility could also prove to be a sort of drag on investments in this financial hub. Households perhaps could dial back on spending. Bloomberg Economics expects growth to come in at around 1% this year. This would be a sharp slowdown from the 4% of 2024, and the government is not ruling out a recession.
Yeah, and Avril, we're all about the margins here. Few doubt that a ruling party will come out on top. Is there anything specific that we're tracking as far as the margin of victory and what that might indicate about potential policy friction, if any?
Yeah, the margin is absolutely key to watch. I mean, this is a ruling party that has won 13 general elections. So that is an unbroken rule of more than 60 years. The Prime Minister has said that he expects this election to be a tough contest because the opposition is sort of better organized. And there is a theory out there that in times of crisis, voters seek stability. This is something that has served the ruling party well in the past, but as we've seen from elections worldwide, that the voters have been dealing blows to incumbents. So this is a theory that's certainly going to be put to the test. And to answer your question about what we're going to be watching, more specifically, it's going to be about the vote share as well as the seats, that the ruling party doesn't lose more seats to the opposition.
Bloomberg's Avril Hong for us there in Singapore with the very latest. And be sure to join us on Monday for more on Singapore's election with Managing Director at Bauer Group Asia. And we'll also be discussing the outcome of the Australian election with La Trobe University AMP and Technology One CEO Ed Choong as well.
Yep, catch those interviews at those times coming through on the back end, of course, of the weekend. Ahead of that, though, markets are doing quite well this Friday, and as you can see, we're now at session highs on S&P futures going into the Friday session. So 9th straight now is likely in play. Asia on track for a 3rd straight weekly gain, and the positive news flow coming through on trade really helping things further along. This is the China Show.
Good morning. Welcome back to the Friday China Show. Here are some of the big geopolitical stories that we are following this morning. South Korea's finance minister has resigned just hours before he was due to become the nation's stand-in leader. Choi Sang-mok apologized but said he couldn't perform his duties under what he called severe economic conditions. Choi had been set to take over as acting president after Han Duck-soo stepped down to run for the top job in elections set for June 3rd. President Trump has threatened to impose secondary sanctions on nations or companies buying Iranian oil. The move targets a major revenue source for Iran and comes as nuclear talks planned for this weekend are postponed. Sanctions could also further inflame tensions with China and the UAE, both of which buy petroleum products from Iran. President Trump has also said that he will nominate Michael Walsh, his current national security advisor, to be the next U.S. ambassador to the UN. Marco Rubio will serve as the interim national security advisor while keeping his job as Secretary of State. The development comes after Walsh admitted to adding a journalist to a Signal group chat discussing sensitive attack plans.
Right. Speaking of here, meanwhile, you have the CIA. You guys might have seen it on social media already. The CIA has released videos aimed at recruiting Chinese officials. Now, this one, of course, coming through, depicts a junior official reaching out to the agency after being disillusioned that his work only serves the advancements of his superiors. Have a look at the video.
俗话说“筑梦人生”，可惜我是为他人之梦。这场梦中，我无法决定结局，我的命都由他人掌控。
Right, point number one to Mandarin. I think they did it also again last year. It certainly is an active, quite a obvious attempt there to recruit disillusioned junior officials, or maybe even higher up the sort of intelligence. As the CIA really just looks to build its intelligence apparatus and just to try and figure out a lot more about their strategic rival there.
Yeah, that's right. I mean, these sort of efforts in some ways aren't a massive surprise, but the timing is sort of interesting to me because the interesting thing about the trade war is that it has created the US and President Trump as a very obvious enemy to China. While before perhaps there was this deep disillusionment, there was sort of real anxiety about the way that President Xi was leading the market and leading the economy. Actually, now we have shifted to this environment where local government officials, we've reported, also local businesses and big businesses are kind of unified under this somewhat nationalist fervor to try and combat Trump. So, yeah, a question mark over just how successful these efforts will be because they're really entering the fray at a moment where China arguably is becoming more united than it has been over the last couple of years.
Yeah, because of the efforts from the other side, ironically enough. Right? And, it's interesting because sort of the notion we get here is that China has more experience and information about the other side than the other way around, right?
Yeah.
And I think that really underscores. The New York Times, I believe, back a couple of years ago, did report that the CIA, that China was able to dismantle the CIA, at least as far as some of the apparatus there is concerned.
Yeah, and China itself has been, clearly flagging these heightened risks of recruitment. Even anecdotally, I know friends who have travelled from the mainland to the US and have received and seen warnings about, don't be lulled into accidentally sharing state secrets, particularly, of course, if you work for an SOE or a state company.
Yeah.
And we have seen the MSS putting out statements statements more regularly warning of, attempts by both sort of U.S. administration, but also other countries trying to recruit Chinese citizens and warning against sort of the risk of that sort of surveillance?
Yeah, because you don't know if you're slowly stepping into that non-deliberately, I guess, is a way to do it. In fact, just on that very note, right, so as we look at markets, and we're going to show you the Hong Kong markets in a moment here, in the next hour of the China show, in fact, our version of reading the tea leaves in Chinese media, right? What smoke signals can we detect when you browse Chinese media? And of course, we have a very special guest coming through in the next hour of the China show to help us understand really the stance and the tone coming through out of Chinese officials and what we can read into that as well. Right, Hang Seng Index, as you can see, we're bid 1.5% stronger on the currency. In fact, at 725.89, that should now put us at about 1 month highs there on the Chinese currency. Plenty more ahead. Welcome back. You're watching the China Show. It's actually an extremely beautiful spring day. I think just coming into the morning, going into the office today here in Hong Kong, and really just greeting. Of course, it's one of those strange, truncated weeks where I would imagine not a lot of people are at work because you do have a holiday, of course, on Thursday and on Monday here in Hong Kong. We are reopening one day only, as they say, for many of these sales. We've seen a lot of tourist flow coming through here in Hong Kong, and certainly some of the places that I was visiting yesterday was, I think, a heaving with Xiaohongshu takers there. Now, all that being said, this is also taking place against a backdrop of more progress, mini progress, if you will, as far as the trade conversation goes. And as you can see, so there's an element of catch up in Hang Seng, and then on top of that, maybe slightly more risk premium being removed because of the talks taking place. We'll really unpack what that means and what it is maybe signaling. That's a question mark from Chinese authorities. So in case you missed it, just two pieces of news I'll do very, very quickly. As you look at treasuries too, by the way, pushing higher on yields because of that too. So about an hour and a half back, the Ministry of Commerce commented that China is evaluating some of these approaches coming through, evaluating possible trade talks. That's the Chinese side. Marco Rubio then separately, in an interview to Fox News, talked about how China has approached them. Again, the same thing. What's worth noting, though, is I think they're both acknowledging each other, number one, but they haven't agreed yet on what the starting point of negotiations will be, right? So the U.S. says the tariffs, and then we'll talk. China says take the tariffs out, and then we can talk. U.S. Treasuries on your screens. BI says, our folks at BI, when you look at the data that we've gotten so far this week, the Fed might not be there yet, but when we get there, and they have lowered their low-end forecast here, cuts will be quicker and they'll be deeper based on, compared to current market estimates, because of just how quickly the data is softening up as well. It's important to point out the ISM numbers overnight, contraction in manufacturing, not as bad as estimates, but we're going into a jobs report later today that might actually look solid on the surface, but beneath the hood, maybe it's worth looking and pointing out some warnings there. Right, markets, as we can point it out, are on decent footing. In fact, just before the headlines broke, S&P futures were in the red. We're now, as you can see, 0.7% to the upside. The gold is bid, Brent crude as well. In most parts of this equity market, Taiwan leading gains here, up about 1.7%. Right. Let's bring in Mary Nicola out of our MLive team to talk us through really. Mary, how are you guys thinking about the market moves today? And, can we trust that the lasting power of this rally?
Yeah, I think one of the key things, as you pointed out at the top of the hour, is just about some of this, just a little bit of a softening tone that we're getting from China. Because if we remember a few days ago, it was a lot of tension between the two nations and concerns that the talks are going to take a lot longer now than was previously expected, with one side saying that they are talking and the other side saying there's no talks in the pipeline. So I think what it sets, especially for China, is that talks are moving ahead. We also had headlines this morning about J.D. Vance talking about India might be one of the first to announce a trade deal. Same thing and Japan might be next as well. So a lot of these incremental moves in terms of signing a trade deal is positive for equity markets. And I think that's going to, and at this point, the equity market is just going to take anything it can get, any small hints, any small glimmers of hope that assure them that an equity rally could continue.
Mary, saying that, you have also got this nice short piece out about the double blow that is hitting equity markets, US tech woes, as well as, of course, the PMI signals that we're getting from China and beyond. I mean, just lay out the outlook for equities this month, if that's even possible. I know the word uncertainty is, of course, ringing through our brains.
Well, that's the problem, right? There's just so much headline risk that is coming through on a regular basis. You know, a few days ago, we were talking about, we wrote a piece on the MLive blog talking about the fact that, you know, the little bits on the trade side is positive, but as long as tensions with China remain, that's going to continue to post like a grim outlook for equities. But I think what we're getting overall is the fact that the earnings results so far from the U.S. have actually been okay. It's a matter of the outlooks. And the outlooks, not only are you seeing it for the companies, but also from what we're seeing from the activity data. So you look at the ISM, sure, it was better than estimates, but at the same time, you read the details, the underlying details, and it's all about the uncertainty. Then this morning, we get Asian PMIs, and Asian PMIs are so much weaker. And are further into contractionary territory, just highlighting the uncertainty that is coming through as a result of the trade tariffs. So as a result, what we're going to see is, as long as these tariffs remain, and as long as we don't have even small bites to show that things are easing, a sustained rally is going to be hard to come by. But what all equity investors are doing is they're just waiting on the sidelines, waiting for those sound bites. We can see it. We can see it from today's reaction, the price action, where the equities are doing well as a result of some soothing of tensions and easing of tensions there. So I think what we're going to see is that we're going to see an adjustment, but at the same time, once we start seeing any announcement of trade deals, that's where we can really shape to see that equities really go further, and at the same time where it's just sort of sets a precedent for more to come, and that's really going to switch in terms of more optimistic outlook.
OK, thanks. Bloomberg MLive strategist Mary Nicola there. And to Mary's point on investors waiting on the sidelines, listening for sound bites coming out, let's bring in John Gong, professor at the University of International Business and Economics in Beijing. Professor, if we can start on the obvious big question here, how should we be interpreting the comments that have come from the Ministry of Commerce on China evaluating US trade talks?
Well, I would interpret this as the first drought of a long drought. It's first rain after a long drought. We've been waiting for this for a long time. I think the statement that the Ministry of Commerce is evaluating really means that, first of all, there's a go-ahead from the very top of the leadership in China. And second, in my view, they're preparing for the negotiation. Who's going to lead the negotiation? What will be the strategy? What is the bottom line? How to deal with Washington? All these things are currently probably being intensely debated and discussed right now. In any case, I can't imagine an evaluation leading eventually to a decline to negotiate. That's just not going to happen in my view. So I think it's very, very good news. We've been waiting for a long time.
So, Professor David here, do you think talks are imminent then? And when I say imminent, should we expect talks, official talks to be more specific, official talks to begin this month?
Oh, I think the Ministry of Commerce statement is talking about the official talk. I think I won't, say it's imminent. I think it's very close. The second paragraph of the statement still says there are a couple of things that Washington should do to facilitate this negotiation. But I think overall, it's not very clear whether these things are the preconditions for the talk or something that Washington should bring around into the talk. I hope for the latter case, but in my view, it's very close, if not imminent.
John, just before we head deeper into this topic, I want to just take a listen to some of the comments that we've had from Marco Rubio on the potential for these talks between China and the US. Let's just take a quick listen.
Can we reach some sort of short-term accommodation with them? That's what they want. I mean, the Chinese are reaching out. They want to meet. They want to talk.
John, I want to pick up on Rubio's comments there, what you make of the US willingness to engage in discussion. What is it that's going to be actually palatable for Beijing as an opening gambit for discussions with the US? And just following on, if we can as well, we have, of course, seen Mike Walsh step down, effectively going to be replaced in the interim by Marco Rubio in that role of national security advisor. So I wonder what you make, what it means for China to see Rubio playing this different role now in the Trump administration.
Well, first of all, let me say that what Marco Rubio said is not necessarily in conflict with what the Ministry of Commerce here in China says. This thing is sort of, happening on both sides, eventually leading to the culmination of the negotiation. Obviously, both sides are talking to their respective audience. If you look at the statement from Ministry of Commerce here, it clearly indicates that it's Washington is sort of saying we should talk. As a matter of fact, President Trump said that too, right? So I wouldn't pay too much attention to this question about who is actually asking first. Obviously, both are asking for negotiation. It doesn't make any sense to argue about who is initiating this contact first. It just doesn't make sense to me. I think regarding the second part of your question about Rubio's role, I think this is not really in his domain. This whole trade negotiation is under the leadership of Secretary of Treasury Scott Bessent. He's now steering the wheel, and Rubio has a lot of things on his plate. It's going to keep him busy for a while, taking two roles in administration. The war in Ukraine, the war in the Middle East, the pending war, the pending conflict between India and Pakistan. It's going to keep him busy for a while. So I don't take too much weight about what he said on this matter.
John, just to pick up on that point, I mean, Mike Walsh was seen something of a figure who was internationalist, who sort of believed in America taking a primary role in the international world order. Rubio is obviously seen slightly differently. So I want to ask what you think that Rubio taking on this role of national security, how does that change things for Beijing?
Well, I would characterize both guys as part of the newcom camp. I mean, they used to take the same position, but of course now, Marco Rubio changes much faster than Mike Walsh does. So I think Marco Rubio is pretty much towing the line of President Trump. President Trump doesn't want to be engaged in any conflict overseas anymore, which is a good thing to me. I don't think Mike Walsh holds 100% the same view. And of course, he had this debacle about this signal thing. So that's why he is, relegated to the potentially, reportedly, to the UN representative from the United States. So I think he is no longer in the inner circle of the Trump's team right now.
Professor, thank you so much for the time. Professor John Gong there at the University of International Business and Economics there in Beijing. That's his message there is talks are likely going to come sooner than later. Now, just really on that note, it's going to be interesting context there with the next conversation coming up here in the China Show. The China Media Project joins us in a couple of minutes. This is the China Show.
Now, we are taking a look at what is making headlines in Chinese media this morning. Xinhua has published an editorial saying it's American mindset, not Chinese economy, that needs rebalancing. Let's bring in our China correspondent, Min Lo. Just tell us, what is this article all about?
Yeah, it's poking hole at the argument that China's economy is imbalanced and essentially saying that China has been going through a dynamic transformation in its economy from being a manufacturing and export powerhouse to now being an economy that is driven by consumption and innovation. And it cited how consumption as a share of GDP has been increasing. And it says while China is doing this, meanwhile, the U.S. has been stuck in a doom loop of its own making, drowning in a gross debt of over $36 trillion, addicted to Wall Street's casino economics and watching its factories turn into a rust belt. And yeah, pretty strong words there. Essentially, it's also attacking the argument that U.S. has about China's overcapacity, and essentially saying that that is not true because many of these Chinese companies have been, going through intense real competition at home. It's a trial by fire, and that's why they emerge as these hyper-competitive and efficient companies. And America just can't stomach that competition, and that's why it is relying on its old playbook of trying to accuse China of protectionism and basically embarking on this beer campaign. And you can read this quote. It says, Washington fears not structural imbalance, but structural progress. And this isn't about leveling the playing field. It's about protecting uncompetitive sectors from actual market competition. So calling on the U.S. to end this zero-sum mentality and saying that essentially China's economy, as it grows, is actually offering more developmental opportunities for the rest of the world.
Min, thank you so much. Min Lo there, our China correspondent. Now, for more on really how we should be looking at what we should be reading, how we should be taking the cues, the smoke signals, false positives, the texture, the tone, and everything in between when you look across Chinese media, and really to understand how China's, the current propaganda strategy is as it pertains to the current tariff war. Let's bring in David Bandurski, Executive Director at the China Media Project, to really help us with that exercise. David, good morning, and thank you for joining us on the show. Let's start with something simple. What's the top of your reading list these days, and what are you taking away from that?
Well, with China, there's, of course, a lot to read. When you talked about smoke signals, of course, one of the most important sources we have, the closest to sort of a voice of the leadership is the People's Daily, the official newspaper of the CCP. So that's always one at the top of my reading list. It's been quiet because there's a Labor Day holiday, but we're seeing a lot of the messages that we just heard Min talk about, really positioning China as a responsible global leader. China is a champion of multilateralism, and contrary to that, the U.S. as a unilateralist, as a hegemon. I want to emphasize that a lot of these messages have been consistent throughout. I think some of the changes we're seeing most recently maybe have more to do with the pivot, the change within the U.S. and China seeing opportunities there for its typical messages than really any particular escalation or change on China's part. But we can talk more about those.
David, I mean, you at the China Media Project, I believe you've been looking at this for more than 2 decades now. And in fact, I think you might just have hit your anniversary, your 2-decade anniversary. I mean, over that period of time, how much more slick has the propaganda machine become? And where are we seeing that, if we are seeing that, manifest when it comes to narratives around the trade war in particular?
Really important question right now, because things are changing right now in the last few months even faster. I think coming around the corner, we're going to see a lot more savvy AI-based propaganda. I would sum up and say, really, over the past decade or so, China has suffered. The whole discourse from the leadership has been about China suffering at the hands of a dominant Western media apparatus. And so the whole policy is geared toward addressing what it sees as a shortfall of Chinese impact. So in many ways, they've been very unsuccessful. And we saw this during the COVID epidemic. And the whole focus kind of on this wolf warrior messaging has been China has been looking at changing this over the past year or so since we've come out of the pandemic. I think we're returning a little bit to this more truculent tone because of the stance of the Trump administration. But I guess one example we can point to, there have been a couple of videos out recently. One, of course, was the truly viral video on U.S. manufacturing returning and what this would look like. So it was an AI-generated U.S. factory floor, a very humorous piece in some ways. So that level of sophistication is really new. I think the overarching story is more or less failure of China to convey its message.
David, are there any signs of a softening in tone?
I think we have various tones we can see across the leadership. If we look at the state media, for example, People's Daily, we've actually, I think, seen an uptick in more, I wouldn't call it aggressive language, but just very firm language. So we've seen also the video that was trending from the foreign ministry on Twitter, what was it called? About never kneel down, I think it was called. So agreeing to the enemy's side is like drinking poison. This kind of language is more typical of what we've seen with the so-called wolf warrior diplomacy. And then looking in the last few days, we had a piece just yesterday about the white paper coming out on the origins of the COVID pandemic and China turning around and saying the U.S. needs to look at itself in terms of, because we believe there's reason to see the U.S. as a possible origin. So China turning around the attack. And we're seeing this a lot more. China attacking the U.S., as I said, as a hegemon. That's the narrative. And the real problem here, I think, in terms of messaging is that, in a sense, China for many years has tried to foist this role on the U.S. It's always talked about the U.S. as irresponsible, as a hegemon, and so on. But the behavior we're actually seeing from the Trump administration is in many ways taking on the role that China has cast for the U.S., almost embracing it. And I think the leadership probably sees a real opportunity here on the media side, of course, but in terms of re-engagement, deeper engagement with Southeast Asia and so on. So we see a really powerful media side to this as well, including a lot more media exchanges with regions like Southeast Asia and the global South.
David, that's a really interesting point about the sort of other side of China's strategy here, also trying to essentially play nice. Can you tell us a little bit more about some of those strategies to try and boost media ties, where they're really particularly focusing their attention?
Yes. I mean, one, of course, is they've long sought content sharing agreements with groups like Xinhua and the China Media Group. The idea is that China wants, especially reporting and information about China, to be to the great extent possible, monopolized by China. So it's taken advantage of kind of the longer curve of a downturn in media capacity around the world, and there's a lot more demand for China news. So this is one thing, and then there's a lot of face-to-face engagement with journalists in regions like Southeast Asia. So content partnerships, journalist trainings, bringing journalists to China. The whole idea is to drive the narrative. But as I've said, to some extent, this has been very unsuccessful so far over the past decade, we could say. I think it's worth pointing out, even with this video, that what I just mentioned, the Never Kneel Down video, all of that push and amplification came from media outside China. I think probably the foreign ministry is delighted to see, for example, CNN talking about this as an escalation and so on. So when I look at that, I see basically an inserted meme that was really picked up and snowballed in the Western media. This is because China still, after more than 7 decades, they have no truly influential media outlets. None of their central media outlets can really drive global debate. So this continues to be a problem for China, but it will capitalize on this moment to portray itself as someone the rest of the world can work with, while the U.S. is difficult.
Dave, thank you so much for joining us. Really excellent to have your insights there. David Bandurski, Executive Director at the China Media Project, with really how we should be decoding some of the messages coming out from state media in China. Stay with us. You're watching The China Show. There is plenty more ahead. This is Bloomberg.
Good morning and welcome back. You're watching The China Show. The tech names, as you can see here, to our right, about 3% on the Hang Seng Tech Index. I'm just looking at some of the movers within within that space. Bear with me, Xpeng is up about 5.3%. So you have a lot of the car makers and really favorable monthly indicators are coming through on sales, particularly in BYD, right? Its best sales month so far in 2025. Right, very quickly as we head into the Japanese lunch break, Nikkei topics, yen is continuing, it's extending its weakness, well, extended its weakness, okay, past tense, but all that said, 145, right? We were at 142 this time yesterday. This really follows the biggest drop in the yen following what turned out to be a fairly more dovish stance coming through there out of the Bank of Japan. Right, Japanese autos in focus too. Can we get that in, please, if we can? I guess we don't have it. Oh no, Chinese autos. Why are we doing this? Anyway, I'll tell you why next. This is Bloomberg.
It's true that the timing for when prices will reach 2% is now slightly delayed, but that doesn't necessarily mean the timing of the rate hike will also be delayed.
There we go. That was the Bank of Japan governor. This time, yesterday, of course, they released the BOJ statement. A few hours after that was the press briefing where I think in some ways, if you think about it, he tried to walk back some of the dovish commentary that's come through. I mean, certainly the takeaway there is hence why rates, the yen, and banks are actually still done amidst an up-arrow story. Yeah, some of the plans for the BOJ to normalize policy might have been pushed back even more so, given the tariff conversations out there. But by the way, he said, our inflation targets, while that might change, it doesn't really change a whole lot if you think about it. Right. Anyway, we'll table that for now, but it's certainly indicative of a lower rate story globally because of what's going on here. Very quickly, so in the last segment, we talked about Chinese EV stocks. Didn't really have a lot to talk about, not a lot of time to talk about them, but effectively just to look at, and we're going to go into the Apple story next, right? We're juxtaposing these two stories. So in terms of what's going well in China so far, EVs, domestic names, BYD, in fact, had its best month in 2025 so far. EVs were a big hit, and of course that also goes well into some of the new inventory and new models coming through post the Shanghai Auto Show. That goes into a broader swathe of sectors moving up. In fact, every single sector on the benchmark right now is higher. Volumes are fairly decent, and that's despite mainland China and Vietnam shut today. And as you can see, this really nice hue of green on your screens. We're now poised for a third week of gains in the Asia Pacific, and it looks like we could get day number 9 on the S&P 500. That's the longest win streak if we do get to day number 9 since 2004. Now we'll see what the Apple story looks like, because that perhaps could be the sort of spanner in the works here. Earnings were out. Some issues as it pertains to the tariffs, issues as it pertains to the Chinese market specifically for some of Apple's products. Certainly the challenge is there. Although when you look at what they've done as far as the buybacks and dividend are concerned, they are returning a lot more money to shareholders, of course, compared to relatively back. We're looking at some of the Apple suppliers trading here across the region.
Yeah, Dave, to your point, I mean, just taking a closer look at Apple's results. Joining us now is Kiranjeet, Kaur, Associate Research Director for Mobile Phones Research at IDC Asia Pacific. I just want to pick up on one point that really stood out for me from your note about the results that we've seen, which is that Apple is the only one in the top 5 to have a year-over-year drop in the first quarter among China. I mean, just tell us, what does that mean for the outlook for Apple this year, and just how difficult are things going to be?
So there are a lot of headwinds Apple is facing in the China market. I mean, consumer sentiment is what it is in this current macro environment and with the trade war. But it's facing a lot of competition from the Chinese players who are being very aggressive, keeping in mind, the current situation. They have their portfolio lined up for the consumers, which is a lot more focused on the value-conscious consumers. But at the same time, they're being aggressive with, what they roll out. They are rolling out a lot of AI features on their smartphones to, differentiate themselves, to step up their game. And at the same time, they also understand that Apple has, a very strong ecosystem. So they're trying to bridge the gap with the Apple ecosystem through their products and services that, Android smartphone can work with the Apple MacBook and so on. And Also, the Chinese government subsidies that were announced earlier, they have benefited these Android players more than it has Apple because of the cap on the price point, which is 6,000 RMB. And most of the iPhones, especially, you know, the more popular ones, which is the iPhone 16 Pro and Pro Max, they kind of fall above, you know, the threshold of this cap that subsidy gives.
Right. Is there a sense, this is a question really, you know, because of what's going on geopolitically, is there a sense that Chinese consumers are perhaps leaning, taking a step back from U.S. brands, or is this purely, to your point, just a hardware, a product issue?
I think to some extent that does play a role, and for the consumer, when they see the alternative, which is also very attractive. So, you know, this patriotic theme does come into play, but at the same time, I think Apple needs to up its game with its, on the hardware front, it's definitely like doing a lot of stuff, but on the AI front, that's where it's kind of lagging behind the Chinese vendors in the current situation.
Kiran, I want to ask also about where AI, excuse me. It's been a long week. AI and Apple stand in all of this. I mean, you've previously said that, you know, Apple is hitting the right spots when it comes to AI, but how are we seeing, you know, what they're doing in that space compete with some of China's own local brands, for example?
So where we stand now, Apple Intelligence is not available on the iPhones in China. Apple had partnered with Baidu last year, and it had formed a partnership with Alibaba this year. So there is work going on. There are developing the AI features, which will go through the you know, approval process from the China government. And hopefully we should hear something within the next month or two, maybe close to WWDC, to see, you know, where Apple stands and what announcements it makes with regards to its AI features.
Does that solve the problem, you think?
It should to some extent, but then again, you know, as I mentioned, that there are other headwinds Apple is facing. The price points, the consumers are being a lot more value conscious. There is obviously the theme of the patriotic theme that comes into play. So all of these headwinds Apple will continue to face, but at least from its product point of view, whether it's hardware or it's software or it's services, that's where it can try to create an edge.
Kiran, when we're looking at earnings and sort of trying to decode where the biggest challenges are for Apple going forward, is this more a story when it comes to China about competition with other local smartphone makers, or is it more of a story about tariffs? And I suppose, can we even make that distinction?
I think there is a lot of uncertainty here, because what we know is that for, you know, what's going to happen for the next 90 days, which is till the end of June. So we know that there is some clarity on the tariff situation for this period, but beyond that, you know, it is very difficult to figure out which. Tim Cook also mentioned in the earnings call that, you know, beyond, you know, the July time frame, it's very difficult to see how that's going to impact the prices, how that's going to impact, you know, the flow of goods between US and China. So I think it's a little hard to say between the short term and the long term on how things will move accordingly.
And just your projections here on any potential changes to how Apple and where it sources its chips from and where the final product is then eventually made in terms of production capacity. India, for example, has really come up in recent years. Just help us understand how shifting, well, the tariff story might be forcing Apple to accelerate its shifting supply chains.
So when we look at the supply chain, we have to see, you know, where it sources components from and then where it finally assembles its products. So if you look at the components, it's got like a couple of hundred components coming from so many different places, including Taiwan, Japan, you know, Malaysia, Thailand, and so on. And obviously, like China still is the biggest base in that case. But it's sourcing from a lot of places. But when we look at the final assembly, China is the biggest base for iPhones as of now, but it has been increasingly shifting its iPhone production to India. So, and as Tim Cook also alluded in his call earlier this morning, most of the iPhones that are directed to the US market, they would eventually be going from the India market. Maybe all of those, India is not, the capacity is not there at this point to export all of the, or meet the demand for the US market from India this year. So China would still be playing a role, for iPhones which are exported to the US this year. But eventually the goal is that most of the iPhones, they are to the US market, they are routed from India. And similarly, as we look at MacBooks and iPads, Apple is looking at alternatives like Vietnam, so that at least for the US market, it kind of shifts out of China in that case.
Yeah, I really don't envy your job, Kiran. I mean, just trying to figure out the different scenarios in different markets for a complex supply chain such as Apple's. Well, it seems, as a final question, it seems that Apple has will manage to skirt the worst of the tariffs right now. What would be your base case as far as tariffs and how that affects prices going into the U.S.? And what would be the worst case in the event, these tariffs do come back into play?
I think I would say the base case is what we are looking at now, which is zero tariffs from most other countries except China, where it's 20%. Whether it stays at 20% or it increases or reduces, it's difficult to say at this point. But I would say that's kind of the base case that we are looking at. But obviously the worst case would be if, the double-digit, triple-digit tariffs that were announced earlier this year, if those come back in July.
Kaur, thank you so much. Associate Research Director there for mobile phones at IDC Asia Pacific, joining us out of Singapore this morning. There's plenty more ahead here on The China Show. Happy Friday.
What we like the most is policy stability and policy certainty.
We're looking for governments to invest in scientific education and making sure that access to that scientific skill set is available through the right channels.
It's important that whichever government comes forward after the federal election gives us a lot more certainty around industrial relations, around environmental and support for mining.
I'd like to see the trade relations and the ability that this government's shown, over the last 3-4 years to stabilise trade relations continue, with whichever government wins the election.
We would really like to see further easing of supply restrictions or supporting supply and fast-tracking of supply of housing.
One is to make sure that we've got clarity on where we want to go with the transformation of the energy system, and that's ideally that would be a common view across both parties.
It's about finding ways to extend that position such that Australians can benefit from the amazing expertise here and the incredible position we've already established.
I mean, innovation is the key to productivity. That is how you stay ahead of the pack.
Some of our guests there over the past few weeks talking about tomorrow's Australian election. Now, while the cost of living concerns has dominated the conversation heading into the election, Australia has not escaped the shadow of the Trump trade war. The Conservative opposition leader, Peter Dutton, began the campaign with a healthy poll lead. But as Paul Allen reports, surveys now suggest Labour's Anthony Albanese could become the country's first Prime Minister in more than 20 years to win back-to-back elections.
Saturday is election day in Australia, and already more than 3 million of the country's 18 million voters have cast an early ballot. For those still undecided, this election's boiling down to one key issue.
Is anyone feeling that you're better off today than you were 3 years ago?
Cost of living and runaway real estate prices are top of the domestic agenda. It's a battleground where both opposition leader Peter Dutton and Prime Minister Anthony Albanese seem comfortable. Trade and foreign policy, though, have left both leaders squirming after President Trump imposed a shock 10% blanket tariff on all Australian imports. Dutton initially copied some Trump policies, including spending cuts styled on Elon Musk's so-called Department of Government Efficiency and ending work from home for civil servants. He's since dumped those ideas and has been distancing himself from the US president.
We trust the United States, and I don't know the president. I've not met him. The Prime Minister obviously has been able to.
So you're not willing to say you trust Donald Trump?
I don't know Donald Trump is my point.
On the same debate stage, Albanese also swiftly moved on from the issue of trust in Trump.
I have no reason not to. I've had a couple of discussions with him.
Do you trust China's president, Xi Jinping?
I have no reason not to either. China's our major trading partner. 1 in 4 Australian jobs depends upon trade. It is in Australia's national interest to have a good economic relationship with China.
Australia has already made a $500 million down payment to the United States under the AUKUS Defence Pact, which will see Australia receive nuclear submarines. Neither major party wants to risk sinking that deal by alienating President Trump, nor risk creating a fresh round of trade tension with China by getting too close to him. Unlike the price of eggs, those issues are too fragile to be on the ballot this Saturday. Paul Allen, Bloomberg, Sydney.
Yeah, there we go. Fantastic reporting coming out of Paul, the price of eggs. Right, from eggs to foreign policy and the broader implications. Of course, the Australian Prime Minister, Anthony Albanese, here has also focused on strengthening, certainly to that point, security ties specifically closer to home in order to counter China's growing influence in the region. But his efforts may be undermined thanks to policies implemented under the current White House. Let's bring in our Australia government reporter, Ben Westcott, joining us out of Sydney. Ben, good morning, and thanks for taking the time. Really, just why should I care about the foreign policy implications here? Just make that point for us.
Oh, yeah. Well, I mean, there are a lot of foreign policy implications out of this election. I mean, basically, if you look at the Canadian election that happened earlier this week, you're going to see a lot of those sort of same factors at play if the polls are correct. So not only are we expecting to see a swing towards the centre-left Labor government that had not necessarily been going to happen just a few weeks back, but we're also, things like the opposition leader's seat is potentially up for grabs. So there are a range of parallels, and that's all thanks to the chaos that President Trump has unleashed with his global trade war since he came to office in January. The US president is really unpopular in Australia, and that's why we've seen the opposition leader Peter Dutton try and distance himself from from the US policies over the course of this election. But he may not have done it quite fast enough to avoid the bleed that he is now seeing in opinion polls. But across the region more broadly, whoever is the next leader in Australia will have to contend with a more complicated region under President Trump. And you don't see that anywhere more than in the Pacific, where President Trump has imposed huge tariffs on tiny island nations. Fiji has got a tariff of more than 30%. And it could hardly be called a major trading partner with the US. And so as a result, Albanese will have to work harder if he wins this coming election to convince voters, or to convince, partners across the Pacific that the West, that Australia and the US are still the best partner rather than turning to China.
It is a tricky balance. I mean, we did just hear it in that earlier package, Albanese saying that he has no reason not to trust President Xi. But you have a very, very nice essay out really exploring how it is that Australia is going about countering Chinese influence among these really strategically positioned Pacific Island nations. Just tell us what it is that Australia is actually doing, how effective their campaign has been in trying to sort of counter Beijing in this part of the world.
Yeah, absolutely. So at the last election in 2022, was disrupted by the news that the Solomon Islands had signed a security pact with the Chinese government, and that really sent reverberations across the Pacific. And that's why we've seen over the course of this government, since Albanese was elected in 2022, a shift towards making greater efforts to bring the Pacific nations into the fold. And that's really paid off in the past year when we saw Albanese's government sign 3 separate deals. One with Tuvalu, one with Nauru, and one with Papua New Guinea, all of which are going to give Australia greater say over the security arrangements across the region. It's a big win for Australia. It's the first type of these deals that they've actually signed around the South Pacific. Now, but we've actually also seen in recent months that the fight isn't over, and Foreign Minister Penny Wong describes it as a perpetual conflict now. Because basically the Cook Islands, which is a close ally of New Zealand, has moved closer to China despite all these efforts by Australia and New Zealand, coming closer to signing a comprehensive strategic partnership with China. So despite all these efforts from Australia across the region, we're still seeing a bleed to Beijing, and that's not going to stop over the coming 3 years, no matter who wins.
Really fascinating to try and understand, how these countries are being trapped really in between the relationship between China and the US here. That's Bloomberg's Australian government reporter Ben Westcott there. And subscribers can also turn to our terminal for more on this story. You can also read Ben's excellent essay there. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors. You're watching The China Show. A very good morning to you. Good morning. You're watching The China Show. Now, we're looking at the May Day holidays. They are underway in China. Everyone else except for us is on holiday, Dave.
Yeah, well, the nature of the news business.
Someone's got to do it.
Yeah.
Well, and that sort of story is really dominating in some of the national newspapers that we are looking at today. You're just looking at some of the pictures, in fact, of the travel rush. The first day of the holiday is expected to be one of the peak travel periods. So Thursday, if you were brave enough to go out and deal with those crowds, this is what you're expecting. The Chinese railway network set to handle some 144 million passenger trips during this time. The People's Daily says the number of travellers on the first day of the holiday could grow 8% compared to last year. The paper also saying tourism hotspots should receive more visitors as footfall increases during the holiday. Now, we should be getting a fuller picture with some numbers that are coming through this week. But I don't know, Dave, have you ever tried and actually travelled on a holiday day in the mainland?
I have, but I'm not doing it again.
Once.
Once was enough.
And never again.
Yeah, I mean, just because the numbers that you mentioned here, and I think it helped that when I did it, I was a student, and I actually did an overnight, and this was way before the gaotie, like the fast trains.
On the hard seat.
I did spend a little bit more, so it wasn't a hard seater,
Okay.
but I was seated on a train, an overnight train from Shanghai to Beijing, which is completely full. Good experience.
Yeah.
I think that the turn of fate then had me working in journalism after that. So I think because of what we're doing in our jobs right now, we our travel habits tend to be counter-cyclical. So no, I haven't traveled, but I'm actually curious to see how all the technology has really made things smoother.
Yeah.
Right. Really going into that. Anyway. What else to watch this weekend? I'm also curious to see when this comes up as well, right? So the jobs report's coming out later today. Really, I think what travel's been like to the Greater Bay Area, I think number one, and number two is, there has been an aversion somewhat to places like Thailand and Japan specifically because of just the perception of the earthquake and all these things, of course, right? And that's really kept, let's see, Hong Kong really closer to home.
Yeah, absolutely.
Quite literally. Anyway, jobs reports coming out, and S&P futures are pushing higher. In fact, we're on 8 days now as of Thursday. We could get number 9. If things stay the way they are, we will get number 9, which would be the longest winning streak on the S&P 500 daily winning streak going back to 2004. Way before, by the way, I was a student. Way before that first train ride. All right, futures pointing to further gains going into the rest of the Friday session here.
Yeah, happy Friday indeed for some, although most people are already on holiday, actually, Dave. Talking about people not going to Thailand and Japan, but people certainly not necessarily working. But it has been a relatively good week, in fact. Overall, when we think about some of the positive news that has come through, certainly ending on a stronger note.
Yeah, and we'll leave it on that very strong and positive note. Happy Friday to all of you. We will all see you on Monday. Say hi to the team.